Ever felt that moment when opportunity knocks, or maybe an unexpected expense pops up, and you think, if only I had a little extra capital right now? We've all been there. Whether it's seizing a promising investment, tackling a home repair, or even just bridging a short-term cash flow gap, the question of accessing funds quickly and efficiently is a big one for many of us. Now, there are plenty of ways to potentially access capital: personal loans, credit cards, lines of credit. But what if you're already actively managing your investments and prefer a solution that integrates with your existing financial ecosystem? That's where platforms like M1 Finance come into the picture, offering a unique feature that often sparks curiosity: portfolio lines of credit, sometimes referred to as M1 Borrow. So, the burning question we're diving deep into today is, how much can you actually borrow from M1 Finance? It's not a simple, one-size-fits-all answer, and that's exactly why we need to unpack the details, explore the mechanics, and understand the factors that determine your borrowing power. Before we jump into the numbers, let's establish some crucial context. M1 Finance isn't your traditional lender. They're a powerful platform that combines investing, borrowing, and spending features into one integrated experience. Their borrow feature allows you to leverage the value of your investment portfolio to access cash. Think of it as a margin loan, but with some distinct characteristics tailored to M1's platform. Now, why would you consider borrowing against your investments in the first place? Several reasons come to mind. Potential tax efficiency: unlike selling investments, which can trigger capital gains taxes, borrowing against your portfolio isn't a taxable event. This can be a significant advantage, especially for long-term investors. Maintaining investment growth: instead of liquidating your assets and potentially missing out on future market gains, you can keep your portfolio intact and working for you while accessing the funds you need. Flexibility and speed: setting up and accessing your M1 Borrow line of credit can often be quicker and less cumbersome than applying for a traditional loan. You typically have the flexibility to draw funds as needed and repay on your own schedule, subject to certain minimums and interest accrual. Competitive interest rates: M1 Finance often offers competitive interest rates on their borrow feature, especially for M1 Plus subscribers. This can make it a more cost-effective option compared to high-interest credit cards or some personal loans. However, it's absolutely crucial to understand that borrowing against your investments also comes with inherent risks. Market volatility: the value of your investment portfolio can fluctuate. If your portfolio value decreases significantly, M1 Finance may issue a margin call, requiring you to deposit additional funds or sell assets to bring your equity back to the required level. Failing to meet a margin call can lead to the forced liquidation of your investments. Interest accrual: while you have flexibility in repayment, interest accrues on the outstanding balance. The longer you borrow, the more interest you'll pay. Potential for amplified losses: while borrowing can amplify potential gains if your investments perform well, it can also amplify losses if your investments decline. You could end up owing more than the initial amount borrowed if your portfolio value drops significantly. With these crucial considerations in mind, let's finally tackle the core question: how much can you borrow? The primary factor determining your borrowing capacity with M1 Borrow is the value of your eligible investment portfolio. M1 Finance typically allows you to borrow up to 40% of the value of your eligible taxable investment accounts. This is a critical point: not all assets held within M1 Finance may be eligible for borrowing. Retirement accounts, for instance, are generally not eligible. So, if you have a taxable investment portfolio valued at $100,000, you could potentially borrow up to $40,000 through M1 Borrow. Conversely, if your eligible portfolio is worth $10,000, your borrowing capacity would be capped at $4,000. It's important to note that this 40% loan-to-value (LTV) ratio is a maximum. M1 Finance reserves the right to adjust this ratio based on various factors, including market conditions and the specific securities held in your portfolio. Certain asset classes, which are considered more volatile or less liquid, might have lower LTV ratios or may not be eligible for borrowing at all. For example, while broadly diversified ETFs and blue-chip stocks are typically eligible, more volatile assets like certain small-cap stocks, options, or cryptocurrency trusts might have stricter borrowing limits or be excluded entirely. M1 Finance provides a list of eligible securities and their corresponding LTV ratios within their platform. It's essential to familiarize yourself with this list to understand the borrowing potential of your specific holdings. Beyond the overall portfolio value and the eligibility of your holdings, another crucial factor is your available equity. Your equity is the difference between the total value of your eligible investments and the amount you've already borrowed. As you draw down on your line of credit, your available equity decreases. If your equity falls below M1's maintenance requirement, which is also typically a percentage of your portfolio value, you'll face a margin call. Let's illustrate this with an example. Suppose you have a $100,000 eligible portfolio and you borrow the maximum $40,000. Your initial equity is $60,000, $100,000 to $40,000. If the market experiences a downturn and your portfolio value drops to $80,000, your outstanding loan balance remains at $40,000. Now, your equity is only $40,000, $80,000 to $40,000. M1 Finance will have a maintenance requirement, let's say it's 30% of the portfolio value. In this scenario, the required equity would be $24,000, 30% of $80,000. Since your current equity of $40,000 is still above this threshold, you wouldn't receive a margin call yet. However, if the market continues to decline and your portfolio value falls further, say to $50,000, your equity would be $10,000, $50,000 to $40,000. The required equity at this point would be $15,000, 30% of $50,000. Now, your equity is below the maintenance requirement, and M1 Finance would issue a margin call, requiring you to deposit $5,000 in cash or sell securities to bring your equity back above the $15,000 threshold. Understanding these mechanics is paramount to using M1 Borrow responsibly. It's not free money. It's a loan secured by your investments, and market fluctuations can significantly impact your borrowing capacity and trigger margin calls. Furthermore, it's important to consider your individual financial situation and risk tolerance before utilizing M1 Borrow. Just because you can borrow a certain amount doesn't mean you should. Carefully evaluate your need for the funds, your ability to repay the borrowed amount, including interest, and your comfort level with the potential risks associated with margin loans. Think about the purpose of the borrowed funds. Are you using them for a potentially high return investment opportunity that aligns with your risk profile? Or are you using them to cover everyday expenses? While M1 Borrow can offer flexibility, it's generally not recommended for routine spending, as the interest costs can quickly add up. With that said, thanks for watching, and until next time.